So first, when we open up our software and load SPY, here we have the price bars, which are the blue bars. The delineator is the red, in this case, the red and gray curve. The arrows are slope changes. They're not buy or sell signals. So whenever the delineator changes slope, which is very important for us to be able to predict, the delineator program will issue an audio alarm, and you'll see an arrow show up on the delineator graph itself. Of course, if we looked in our data screen up here at the top, we can see exactly what the value of the slope is. So this is the delineator. These are slope changes. This yellow line with the orange dots is the graph of the slope line. And the slope's value is shown in the data screen, and the change of the slope from one period to the next is also shown in the screen. These white arrows on the slope graph are there to indicate when there is high momentum. The stronger the momentum in the slope, the more of a pull on price there will be, either up or down. So we've got two sets of arrows. We've got the arrows on the delineator, which are slope changes. We have arrows on the slope line, which indicate when there is strong momentum. We have volume at price on the left, which shows at what price level there is the greatest volume. There is one more component, and those are the chevrons, single and double chevrons. We have double chevrons up, single chevrons up, double chevrons down, and single chevrons down. The chevrons are there to identify support and resistance levels and to identify ranges. When we can connect chevrons, there is stronger support or resistance. So if we connect these points, we have strong support at this level. We have a lot of volume at that point as well. So in this level here, which is about 191, here's 192, and this level down here is 191.70. Where you get these chevrons, those are the ranges and the support and resistance. Here's another one. We use at least the middle range of that last bar. So let's clear that last one here. There we go. So we would connect this double chevron with this single chevron probably somewhere around there, which is about 194.15. So now we have this range, and we have smaller levels, and all these levels are identified by the chevrons. Okay, so those are the various parts of the primary chart: the delineator line, the value of the slope, when there is momentum in this change in the slope, and when there is a slope change on the delineator. Now also notice that in this graph, the delineator is blue here, it's red here, it's gray here, it's blue there, it's red here, and so on. What is that all about? Well, the process of using the delineator is using two time frames: a longer term time frame to identify the main trend, and a shorter term trading time frame to trade subcycles within that longer term trend. So let's switch over and take a look at our secondary delineator, and all we do is click secondary, and there it is. Here's our primary. Here's our secondary. So the secondary defines the main trend on a daily basis. When the secondary is red, we're in a down cycle. When the secondary is green, we're in an up cycle. When the secondary is blue, we're in no cycle, neither up nor down. And again, the arrows are slope changes. They're not buy or sell signals. The yellow line here is the slope line, as it is in the primary, but it's the slope of the secondary, and our chevrons are as they are on the primary. They identify support and resistance. So when the secondary is trending, when it's green or when it's red, we expect our ranges will expand and our trading risks go down. When the secondary is blue, there is no trend, our ranges compress, and our trading risks go up. So if we come back to our primary chart, we can see that it has multiple colors. The delineator is either gray, green, blue, or red. And on this screen we only see gray, blue, and red. But if we scan back into time, we can see that there are periods where it does turn green. So what does that mean? Well, we use two time frames. We take the secondary's trend and we superimpose it on the primary, which identifies subcycles within the trend on the secondary. So when the delineator on the primary is gray, it means that the direction of the primary delineator is not confirmed by the direction of the secondary. We can see here that the secondary has been red. It's been in a down cycle for 26 days. And our primary, whenever it turns up, it's turned gray, which tells us that the direction is not confirmed by the direction of the secondary. Hence, this is a counter-trend cycle. When it's colored red, in this case, back here from July 30th through August 1st, we know that its direction is confirmed by the direction of the secondary. Hence, it's a main cycle trend. We would expect to see lower lows and lower highs. And in the case of an unconfirmed upcycle, we would not expect to see higher highs and higher lows. In this case, we got lower lows here and slightly lower highs, so that's very consistent. So the reason why this is important is it tells you what to expect during each cycle on the primary. If we have an unconfirmed upcycle on the primary, we would not expect to see large price gains. If we have a confirmed down cycle on the primary, we would expect to see large price losses. And this is what separates the delineator from other methodologies, and that is that we can always know what type of market to expect and what type of trading conditions to expect. And then we simply compare what does happen with what we expect to see happen and make adjustments accordingly. Okay, so now that we've learned the basic components of the delineator and the relationship between the secondary and the primary, let's get into the meat of the program, which we can see up here in our data panel. We can see we have the values of the slope, the change, the value of the delineator itself, and signal weight. Signal weight, or market breadth, is what powers the delineator. Signal weight ranges from a negative to a positive level, from about minus 2,500 to plus 2,500. When it's between minus 500 to plus 500, it's considered weak. When it's between 500 to plus minus 750, it's considered moderate. When it's above plus 800 to about plus 1,200, or minus 800 to minus 1,200, it's considered strong. Above plus or minus 1,200, it's very strong, and when it's above plus 800 or plus 2,000, it's extremely strong. So let's run through a little exercise. Here I'm pulling into the screen from the Delineator Basics section a little exercise that we can run through. Signal weight is market breadth, we know that. The slope is the value of the slope of the delineator. The change is the change in the value of the slope from the prior period to the current period and is a direct measure of momentum. And we're going to see how the primary value is calculated. So let's assume that signal weight stayed at 0 for an extended period of time. If it did, the values of everything would slowly drop to 0 and then would stay at 0. So let's assume that everything just starts at 0. And let's say at time period 1, signal weight rises to plus 1,000. We would see the slope move to about plus 100. Of course, the actual value that the slope does move to is determined by the program at the time, but for the example here, let's just assume it runs to plus 100. So again, signal weight is at 0. It jumps up to plus 1,000. We see that the slope would then jump to plus 100. And the change would equal 100 because the change is the value of the slope from the prior bar to the current bar. So if the prior bar was 0 and the current bar is 100, the change would be plus 100. The primary value is calculated by using the old value of the slope plus the new value of the slope. So if the primary were 0 at the prior bar and the slope ran to plus 100, the primary would equal 100 because the primary value is equal to the old value of the primary plus the new value of the slope. So 0 plus 100 equals 100. So let's say at time period number 2, signal weight stays at plus 1,000. The slope moves to plus 190. The change would then equal plus 90 because the old value of the slope was 100. The new value of the slope is 190. Therefore, the change is 90 ticks from 100 to plus 190. We then would calculate the value of the primary as the old value of the primary plus the new value of the slope. So 100 plus 190 equals 290. So let's say at the third time period, signal weight drops to plus 500. The slope would move to plus 230. The change would move to plus 40 because the change is the old value of the slope to the new value of the slope. So if the old value was 190 and the new value is 230, obviously the value of the change would be plus 40. The value of the primary would be plus 520 because the primary value is calculated as the old value of the primary plus the new value of the slope. So plus 290 plus 230 equals 520. So let's say if at the next time frame, the next time period, signal weight drops to 0, the slope would stay at plus 230. The change would be 0 because there was no change in the value of the slope. The primary would then jump to plus 750, which again is the old value of the primary plus the new value of the slope. So we can see here that there was very strong momentum at time period 1 at plus 100, which is the value of the change. It then drops to plus 90, then drops to plus 40, then drops to 0. So we can see that in this example that there was very strong momentum early on, which then moved lower as time moved forward. And the value of our slope line, which is graphed again in this yellow line, and we can see that this little white up arrow here means that there was high momentum. It's the momentum of the slope reflected by the value of the change that we use to determine what the strength of the cycle is from one point in time to another. We would like to be trading during the periods of time when there is strong momentum in the value of the slope, and of course always trade in the direction of the delineator. So if the delineator were up, we wouldn't want to be looking for short signals. We would be wanting to buy lows and sell highs, take our profits into highs. We would not be wanting to sell the highs and look to cover. We always trade in the direction of the delineator. So if we look up to our data screen, we can see that the slope is 396, the change is plus 16, signal weight is plus 1600, which is very strongly positive, and the value of the delineator is plus 2376. Okay, so now that we know all the various components of the delineator, and we know how signal weight affects the value of the slope, and we use the change value to determine the momentum of the delineator, let's use our tools to be able to predict when the delineator can change and when it cannot change slope. So to do that more easily in this example, we're going to move over to the 5-minute delineator. And I'll just click the 5-minute button, and then we're going to bring in our stats calculator. So here's our stats calculator. What the stats calculator allows us to do is determine what level of signal weight is needed to turn the delineator during the current bar. And by turn the delineator, I mean have the delineator change slope, because when the delineator changes slope, we have a new cycle. So we're looking at the 5-minute here. We see that our slope value is plus 124, and we see that our change value is minus 1.51. The change of minus 1.51 means that the value of the slope has dropped 1.5 ticks from the prior bar. And we can see that if we use our cursor, we can see here that the slope at the 1555 bar was plus 126, and that the slope at the new bar is plus 124.16, so that change is obviously minus 1.51. So we now know that the value of the slope has declined by that amount, and in fact by looking at our slope graph we can see that the slope had been declining since about 2:10 in the afternoon. If we take the value of the change, provided that the sign is different than the value of the slope, which indicates that the slope is moving in the opposite direction now, and we divide the change into the slope, we get the time till the next slope change in bars. And we see that the program calculates that automatically under TTX slope, time till slope change, which in this case is 82.04 bars. So on the 5-minute time frame, 82 5-minute periods is obviously a long time. We can move to our stats calculator, and we always want to hit recalc. Every time we use the stats calculator, even if we've just hit recalc again, because every time period that changes, these numbers change. On the left columns, we see our primary delineator, which in this case is our 5-minute. And on the right column, we have our secondary delineator. We look for these values that say X slope. And we can see that there's one on the primary and there's one on the secondary. And in the case of the 5-minute, for our slope of the delineator, which is currently 124, for it to drop to 0 and then to minus 0.01, signal weight during the current bar would have to drop to minus 860. We see here at minus 840 the slope would be 0.96, which is still positive, and at minus 860 the value of the slope would be fractionally negative, but that's where the slope change is, when the value of the slope goes from a positive number to a negative number. We can see that on the secondary, to move the secondary slope up, would need to jump to plus 2880 during the current day. So that isn't going to happen on this day because 2800 signal weight is more signal weight than there could be in a day. But if we look up at the data portion of our screen, we can see that TTX slope shows up as 0.60, which tells us that it's possible that tomorrow we could see a slope change up on the secondary. But let's go back to our 5-minute, and we can see that it would take 82 bars at the current level of signal weight for the slope to change, so that's not going to happen today. Signal weight would need to reverse to minus 860 for the slope to come down. So let's move our stats calculator out of the way and go back to our 30-minute chart. So we're back on our 30-minute chart, and let's bring in our stats calculator, hit recalc. And if we come over to the primary delineator, which is this time frame, and look to see what level of signal weight is needed to turn the primary down during the current bar, we can see that there is no X slope there, and that even at minus 5,000, the primary value is still a positive number. So we can see in this example on the primary that we shouldn't expect to see the primary change slope anytime soon, even if signal weight reversed to twice what the most negative level of signal weight could be in a day. So that tells us that it'll be a long time, many bars, many hours, even at a strongly negative signal weight, before the primary can turn down. And of course, if we come to our secondary, hit recalc, we can see that as with the prior example, for the slope of the secondary to move up, we would have to see signal weight move up to a very strongly positive level. So that's not going to happen today. So that's the basic delineator tutorial. We've learned about the components of the delineator, and most importantly, we've learned how the change in the value of signal weight affects the value of the slope, and how we can use our stats calculator to determine when the delineator can turn up or down and when it cannot. Moving forward, using the 5-minute delineator for several weeks is what you should focus on, with the goal of learning how to determine when the delineator can change slope and when it cannot. Because when the delineator changes slope is when new trends are born. And that's what you'll need to learn how to recognize. And that's something that only time can show. So thanks for watching this tutorial, and there'll be additional tutorials for you to look at as well.